This is Monty once again from DPL Surveillance Equipment. We just got back from a nice short vacation in Pismo Beach, California. And me and my wife had a very good time. Visited one of our favorite hotel spas where they have this outdoor hot tub where you can literally sit under the sun or under the stars and just relax and contemplate and take it easy and relieve your stress and all of that. And have a nice romantic evening with your significant other. And it was just a great time. I recommend you guys go out to Villa Springs and specifically the Sycamore Hotel and Spa out there. And while you're out there, check out the Hilton Garden Inn in Pismo Beach. And just relax and take it easy. And visit the California Fresh Market out there, where you can eat very good, high quality, natural organic food. Got the delis. They got the tremendous selection of salads and juices and natural juices and all your favorite beverages, whether it's hot, cold, coffees, teas, whatever. Just get out there as soon as possible and have a good time. Very nice atmosphere, very nice environment. Okay, who am I? Good question. My name is Monty Henry, owner of DPL Surveillance Equipment. We're a full-service surveillance and security equipment company. We have lifetime guarantees and warranties on all the products. 24/7, 365 tech sales and customer support. The largest inventory of items that not only can you buy, but you can rent and you can lay away as well. Humongous selection of articles that you can read, videos you can watch, podcasts you can listen to, blogs, educate yourself on surveillance, counter-surveillance, anti-terrorist technology, health and fitness, economics and finance, you name it. We probably wrote about it, blogged about it, made a video about it, or a podcast about it, I'm pretty sure. And also, we revamped the website, as I like to mention, and very easy to navigate, very professional, high-quality design, chock full of new products, some used products, which were our formerly rented products. So they're like new. If a product has only been rented out for like a week, and the customers take very good care of our rental products because we have their credit cards as collateral on file. So no one wants to jeopardize their credit card deposit, so the collateral. So they're going to take care of the product, obviously. And we're phasing out the use of MasterCard and Visa, American Express. We're tired of the chargebacks, the tremendous amount of fees, batch settlement fees, discount fees, service fees, statement fees, you name it. Just got every conceivable type of fee, which basically means we get to charge you for anything that we can make up. Is basically what that amounts to. So we're going to do it without that and use cash-like transactions like Bitcoin, like cashier checks, money orders, and stuff like that. And that way we don't have to worry about some idiot trying to reverse a transaction because the wife came home and talked the husband out of it, or vice versa, or someone found a cheaper product on eBay or something like that, or it looks like a cheaper product. Some Chinese knockoff or something. All these different stupid excuses that customers give for wanting to undo a transaction, which we would rather not have in the first place. But yeah, with the Bitcoins and the cash-like transactions, you won't be able to just go to some stupid company and claim that there's a reason to reverse this transaction. With cash-like transactions, Bitcoin, cashier checks, money orders, etc., wire transfers, we will have to discuss that and see exactly what's going on and whether or not that transaction warrants being reversed. So unfortunately, you're going to have to bring back the idea of adults talking to adults and interacting with each other to figure out how to do these transactions and undo them as well. Now, the reason why we're here today has nothing to do with spying, surveillance, or counter surveillance, nothing to do with credit card companies and such, but has everything to do with hedge funds. Now, in the hedge fund industry, you may ask, what is a hedge fund? Well, I'm going to skip the technical or the proper definition. I'm just going to let you know it's basically an unregulated investment area where if you got a lot of money, if you're an accredited investor, you got like a couple of $100,000 or a minimum to invest, $1 million of net worth or something like that, then you qualify as a accredited investor, and you won't have a problem investing in hedge funds. Now, what's been going on, and I always like to point out what is the overall trend and what is the significance of some of the things that are going on with investor capital and in the financial markets overall in terms of how it affects the layperson or the people who don't have a lot of time and effort to put into trying to make sense of all of this stuff. Now, in the hedge fund industry, you typically have millionaires and billionaires who invest their money and they want to get good returns. And the hedge fund managers, Daniel Loeb is a famous one. Who else? Daniel Loeb, and to give you another name, I think Michael Weinberger, Jamie Dinan, Dinan, some of these guys. But this particular hedge fund, for instance, Serrano Capital LLC, is closing less than a year after it got off the ground. The latest signs of the difficulties new funds are having raising money. Michael Weinberger's hedge fund, managing about $230 million, was launched last year, hoping to raise as much as $1 billion. So they fell a little bit short of the total amount of money that they wanted to raise. And in Michael Weinberger's hedge fund. Now, the reason why this is significant in the first place is because, again, hedge funds were the domain of the wealthy people, and they didn't typically have a problem raising money up until the economy started slowing down and ETFs and other investments came around where you didn't pay exorbitant fees. So believe it or not, wealthy people are even trying to watch their nickels and dimes. And they started pulling back on investing money in the hedge funds. The percentages that they were paying out in fees to the hedge fund managers were justified when you got the extraordinary returns, 10, 20, 30%, whatever it was, in the hedge funds. But all of a sudden, those types of fees were not justifiable when the performance started slowing down. So make sure you understand this. As long as you're getting the type of performance, the fees aren't an issue. But lo and behold, the performance started taking a dip, and the hedge funds were no longer able to attract that type of capital because, who wants to pay a lot of money in fees if you're not making it up on the performance? And besides, the ETFs and some of the other things were cutting each other's throat to manage money. So a lot of the wealthy people started to take a look at alternatives. And I want to put this in the context of seeing the crypto industry with Bitcoin particularly. A lot of the wealthy people, Southwest Bitcoiners, getting extraordinary returns. There's a firm by the name of Pantera, I think it's Pantera Capital. They started investing in cryptocurrencies early on, and they got like a 10,000% return, some ridiculously insane return. And anyway, Pantera, and amongst others, went on record and talking about their returns, and a lot of people started to, again, take a look at cryptos and try to figure out what the heck are we missing out on if these crypto people are getting these types of returns. What are we waiting on? So anyway, hedge funds looks like they're going to be struggling over the foreseeable future until they start to take a look at cryptos as well. And believe it or not, a number of hedge funds are indeed looking at cryptos as part of their investment strategy because, no one wants to be completely left out of the game. So I think going forward, you're going to see more hedge funds taking a look at cryptos and trying to get those extraordinary gains. But over the short term, it's going to be very rocky because these guys have figured out a way to knock the price down while they accumulate as much as possible for their inventories. And once they fill up their inventories with enough cryptos to have liquidity, then of course you're going to see the prices shoot up significantly. So just be aware of the fact that as you buy in alongside these wealthy people, these millionaires and billionaires and hedge funds and everyone else, Goldman Sachs, JP Morgan Chase, Morgan Stanley, as you buy into the crypto space alongside these wealthy people, it's definitely going to be a rocky road, but I can tell you over the long term, and this is something that I've experienced personally when I first got into cryptos probably 5 or 6 years ago. My percentage returns were extraordinary, and I have never seen anything like it, and I've been investing in securities or equities since I was 19, 20 years old, and so that's like 30 years, or 25 years at least. So I just want to tell you guys, this is one space where you're going to see more and more people having to get some exposure. And the reason why I say have to is because one widely known strategy when it comes to investing is to have exposure in those areas where you get correlation that's the complete opposite of what you already have in your portfolio. In other words, if stocks are zigging, you want something in your portfolio to zag. It might be gold, it might be real estate, and it definitely might be Bitcoin or some other cryptocurrency, but you definitely don't want everything in your portfolio to go in the same direction at the same time. You have to have that opposite correlation effect going on in your portfolios. So that's one strategy you guys may want to keep in mind, especially you novice investors. Make sure that you have enough diversification in those types of assets, particularly that are going to do the complete opposite of what some of your current holdings are going to do. And that way, again, when everything is going down, certain things are going down, there's a number of things that are going to go up because that negative, I think it's a negative correlation, but it's a correlation that's the complete opposite of what you currently have in your portfolio. And I sound like I'm out of breath because I'm wiping my car down, and while at the same time as doing this. But that's what I do. I typically do everything at the same time. I like to multitask. But yeah, so Bitcoin is, again, turning the investment world upside down. ICOs are replacing IPOs. ICOs are a very risky type of investment, but at the same time, just like IPOs, when IPOs first came out, they were fantastic investment people, only available to the rich and accredited. ICOs totally bypassed all of that and allowed a lot of new people, a lot of fresh blood to get into the space. And sorry about that. Anyway, a lot of fresh blood got into the space and were able to take advantage of raising money and investing in startup companies in a way that the Securities and Exchange Commission was not particularly comfortable with. But the good news is ICOs is definitely an alternative way of investing in new companies, new ideas. And Wall Street is, for better or for worse, taking a look at it and trying to figure out how to deal with this new beast. And it's going to have to mature. It's going to have to shake. We're going to have to shake out all of the players who really don't have a good business model, a good idea, strategy, or whatever, and we're going to hopefully be left with some good companies that will hopefully become the next Amazon or the next Microsoft or Apple or whatever, Facebook, hopefully. I don't know about Facebook. They're getting into a lot of trouble lately. But anyway, it looks like the cryptocurrency industry overall is definitely giving Wall Street a run for its money. And I think Wall Street is realizing in order to have a future, they got to participate. They got to have some exposure. They got to have some involvement in the cryptocurrency space. So you're going to see a lot of acquisitions, a lot of mergers, a lot of people moving from the regular traditional financial markets, going from the traditional banks over to the crypto space, trying to figure it out, trying to understand it so as to not be left out. No one wants to be completely irrelevant. So that's what's happening. So anyway, I just want to give you guys a heads up and let you know what's happening in the hedge fund space is only the tip of the iceberg. Lots of people are taking a second look at some of these other investment vehicles, and they're just asking themselves, what am I doing spending so much fees to a hedge fund, not getting the performance to justify the fees? Why don't I take a look at these other things? So whether it's ICO, whether it's a blockchain startup, whether it's a direct investment in Bitcoin, whether it's offering custodial services for Bitcoin holders and Bitcoin investors or something like that. There's all sorts of different things that you're going to see over the short term and long term in terms of new ideas in the crypto space, and it's going to suck up a lot of money from Wall Street and hopefully create more opportunities for people who missed out on the Googles and the Apples and the Twitters and some of these companies that Silicon Valley has kept us away from for so long as far as getting in on the ground floor. Anyway, I'm going to wrap this session up. Hopefully you got something out of it. Hopefully you understand that, what's going on in the traditional financing space, and maybe you'll be able to take advantage of what's happening, okay? So as I always like to say, keep your eyes open, keep your ears open, and stay safe out there, okay? But you guys have a great day, and take care, bye.